Hi, I'm Sarah Borkerson-Keto with REIT.com here at REITWorld 2013 in San Francisco, speaking with Jaap Tonckens, Chief Financial Officer of Unibail-Rodamco. Thank you for coming to see us. Your company's been active on both the acquisitions and development side of things. Can you describe the pros and cons of both approach in the current market?
I think the pros of acquisitions is you can acquire assets as long as they're the right asset, the right price, the right structure. You can acquire them and immediately get rental income. You obviously pay for the rental income, but you acquire it, and if it's a good price, it's a fairly low risk proposition. Development, by definition, especially in Europe, where zoning typically plays a very important role, takes a long time to go from concept to actual opening, sometimes as long as 10 to 15 years. So that takes a very long time, whereas retailers in today's world are no longer willing to commit many years in advance of opening a new shopping center. The development risk has gone up. However, because so many of investors are chasing the large shopping centers that we are specializing in, it has become very difficult to find these, as institutional investors typically have a cost of capital advantage, and so acquisitions are harder to come by as fewer of these large assets ever trade. So development is most likely the largest part of the growth, other than, of course, better operating the standing assets.
And your company has reported an increase in rental income so far this year. How does that look going forward?
I think the one element that people typically focus on, oh, your rental income is growing up this year, so therefore things must be going fine. Actually, the increase in net rental income that we're seeing is a result of, one, the leases that were signed last year, which come into effect this year, as well as acquisitions we've made or new shopping centers that we've opened. Overall, we see like-for-like growth continue to be good. I think going forward, like everybody else, we are on an island, and you do see more reluctance of retailers to be willing to commit to higher prices because of their level of uncertainty about consumer spending. But it depends very much on a country-by-country, almost city-by-city basis. And the trend we're seeing is that retailers want less stores because the internet becomes such an incredibly effective tool, which also means they're going to be more selective about where they're going to take space.
Right, and you have properties throughout Europe. Are there general trends that you can point to in terms of store size, what customers want these days?
Sure. I mean, I think customers are starting to become almost channel neutral. You know, most retailers are moving to an omni-channel format, whereby they expect seamless integration between physical retail and online retail. So for the customer, what the customers want is a variety, a unique collection, if you will, of retailers, but not just in a big box where they can just go and get stuff. It really is about the experience and the amount of time that they can spend there. That's why you see the trend, whether that is in Westfield London or in our shopping malls, where the dining experience becomes a much more important part of the experience, where people go to the restaurant not just because they happen to be there when they find out that they're hungry, but they're actually making it a destination. They also go see a movie, and so the dwell time in the shopping centers actually increases. So what you're seeing is, for the best shopping centers, which we describe as large, sizable, more than at least 50,000 square meters, with at least 100 stores, are doing much better, because you can offer the variety of retail as well as the marketing, create the level of experience that people have come to expect and are looking for.
Thank you, Jaap, for stopping by.
Thanks for having me.
And for more news and analysis on all things REIT, please visit REIT.com.